Well, welcome back, everyone. This is Wells Mateer again, your favorite uh, Forex trainer. In today's session, I'm going to share with you another strategy that you can actually add to your trading strategy. Hopefully, you guys got a trading strategy in place that you can follow every time you place a trade in the market. Because without a trading strategy, it's going to be really hard to make a profit. And I say that because I've experienced when I first started trading, not having a trading strategy, and it was a nightmare. Okay. So, with this particular strategy, I'm going to share with you what to look for on a daily basis. Okay. And hopefully you get value out of this, and then you can add it to your puzzle, right? Because learning how to trade is about accumulating a lot of puzzles from different traders and then making that puzzle your own, and then practicing your own strategy by taking a piece of everybody else's puzzle and putting your puzzle together, creating your own trading strategy. And by doing that, you will have a blueprint for yourself, a roadmap for yourself to execute good trades, to execute profitable trades. So it's all about practicing your trading strategy. It's all about patience as well. It's better to take one good trade than multiple bad trades. Okay. So when you're also placing a trade, it's important that you ask yourself a series of questions when you look at the chart. Like, what trend are you in? Are you in an uptrend or a downtrend? You get the overall trade, the overall trend in the higher time frames. Okay. And I'm talking about the weekly, the daily, the 4 hour time frames, right? So by looking at the 4 hour time frame, we'll go ahead and look at the chart right now. Okay, I'm going to take this off just to show you something. By looking at a higher time frame, you can get an overall view if the market is making higher highs and higher lows. Okay, so you'll take a tool, which is the path tool, which you can find it over here as well. And it's actually where is it? I have it as a favorite, but I want to show you where to find it here. Okay, here it is. The path tool, you just highlight the star to make it your favorite, and this little panel will pop up, and all your favorite tools will be on this panel. So you'll take that path tool and you'll start from the bottom and you start charting up your charts based on what you see. So you see higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. So by doing this, you can to say to yourself, okay, if I put a trend line here, right, I can see that this is an uptrend, right? I can see that the market is in an uptrend. And I'm looking at Bitcoin against the US dollar. So in the past couple of hours, right? Because look at the 4 hours, we see the market going up. So there's an uptrend. So pretty much we looking for trades going up, right? You don't want to place any counter trades because if you try to guess that the market's going to go down, it may stop you out because you don't know how far down it's going to go. But if you get strong momentum um, going up, you want to go to the lower time frames, right? And try to place a trade in lower time frames when the lower time frame shows you a bullish momentum going up. It's important that you understand that because you may see in a lower time frame that the trend is trending lower, and that is just a retracement off of a higher time frame. Because on the higher time frame, the market's going up. So it's important to understand that. So if you go down to, let's say, the hour, you might see, okay, yeah, it looks like it's a downtrend right here. But again, the overall trend is higher based on your trend line, right? So you don't really want to place trades right here unless you're a counter trader, right? Unless you want to wait for the trend to retrace, right? Back to this line here, and then you place a trade somewhere close to this trend line or higher trades for the market to go higher. Okay, so this will be like a retracement. And of course, you want to place a trade on a retracement because the theory is buy low sell high. Okay, so you don't want to place a trade on the top of the trend. You want to place a trade when the trade comes down and tries to retrace back to the trend line, and it gives you a signal that it's going to continue its journey going up. All right. It's important to understand that concept. All right. So, what I want to share with you a strategy that you could use to help you in your day-to-day trading. Okay. So let's go down. There is a indicator that I want you to put on your chart. So when you go to indicators, okay, you're going to go ahead and type in day separator. Okay, day separator by SECWANG. You're going to highlight and star this separator. So you can put the separator on your chart. So I already have it here. Okay. And this is what it looks like. So I'm on the hourly. So you want to place it on the hourly. And what you see here, now yours might be dotted. If it is dotted, you just go to the gear here and make it a solid line as far as style. Okay. And the plots, you just make it a solid line pretty much and darken it. Okay. You could change that by here. Okay. So this is the plot line, and you want it to be a solid line. Okay. You darken it. You can just take a look at my settings here. All right, and then you click OK. All right, so what happens is you'll see these lines pop up on your chart. These are separators of every day that's the market, every day in the market in the past week. So I'm going to go ahead and erase this. And I'm going to go ahead and erase this because you already know that it's in an uptrend, right? So, but when you place these lines, the day separator, I want you to notice something. In the day separator, you'll see every day the market is either doing a higher high and a lower low. Okay. So by looking at the highs and the lows of the day activity, what we want to see in 2-day increments is when you see like this area here, you see a low here, and then you see a low here. So you look at the two lows. And when you see two lows, okay, you can anticipate the market going higher. When you see two highs, like this is a high and this is a high, you can anticipate the market to go lower. Okay. Hopefully you can see that. But there is a neckline. Okay. So if we look at this high here, we mark that out. Let me just mark it out for you. Okay. We use this tool. Here's a high. That's the day's high right there. Right. And we're going to mark the day's high on this one right here. Okay, so this is a high, this is a high. There's a two highs of this particular day and the high of that particular day. Okay, now there's going to be a neckline, okay, that you have to chart out as well, which is typically right here. Okay, now when you place this neckline, you can anticipate the market, okay, to go down, hit the neckline, and then you would place your trade down here if you're a counter trader. You try to catch these pips going down. Okay. So two highs, you see two highs on different days, this day and this day. You can anticipate the market to go down. Okay. And the same is true if you see two lows. So if we erase this, and we erase this, and we erase this, we'll see the low here. We'll mark this low for the day. And we'll mark this low for this day. And what happens? These two lows, now you got to mark out where your neckline is going to be, right? Where's your neckline? Your neckline is going to be here, right here. So once this neckline is broken, as you can see, it happened one day, second day. On the third day, the market, broke the neckline, bounced off the neckline, and went higher. Okay. So when you see something like this, you can jump into the market for all of these to try to capture all these pips based on your lot size. Okay. So let's look at it over here now. So I want you guys to practice it. You might want to have to rewind the video to understand what I'm truly saying. But again, we'll do some back testing real quick to show you some more examples. Well, let's go over here. We see a high in the market here, okay? And then we see a high in the market here. So when we see two highs, what can we anticipate? The market to trend lower, okay? So you could mark it up like this and say, okay, this is a high. Okay, you can use different tools to mark your highs, to mark your lows. Okay, that's a high, right? And this is a high. Yesterday's high, today's high, right? You got two highs. What did I say? When you get two highs, okay, you can anticipate the market to go lower and go in the opposite direction. Because all we got to do is place our neckline. This is our neckline, right? Now, if this is our neckline, what are we waiting for? We're waiting for confirmation that the market's going to come back to the neckline and trend lower. So if you created this neckline right here, right below this black candle, okay, what do we see? If we open this up, we see a high and a high and then a neckline. The market broke the neckline, right? The market broke the neckline. It broke the neckline, right? And then with this candle, try to come back up a little bit and then continue its journey going lower, right? So that's a counter trend. So that's what I'm talking about. When you see two highs, the market's going to trend lower. When you see two lows, remember this day and this day's low, you get a low here and a low here, market trends higher. Okay, let's look at some more examples. I'm going to clear out everything. Okay, let's do some back testing. And this is done on the hourly. Okay, now you can place your trade in the 15-minute, where you'll find this in the hourly session. Okay, so make sure you have it on the hourly. Okay, so let's do some back testing. Let's look at some historical data here and see if we can find what I'm talking about. Okay, so what do we see here? On this day, the market has given us a low right here, right? And on this day, the market gave us another low. So what can we anticipate? If the market's giving us lows, next day, you have the market trending higher. Okay, so if we were to put our neckline, say right here, what happened? The market bounced off the neckline and trended higher. Okay, all right. Let's look at another example. Remember, two highs. There's a high here. Now, I want you guys to do your own back testing as well. There's a high of the day here. They opened up, it opened up higher, right? And the next following day, the market has a high here. All right, so there's a high here and there's a high here. Again, what are we waiting for? We're waiting for the market to break the neckline. Okay, and again, the neckline will be over here. And what did it do? It broke the neckline. Okay, even if you miss this neckline right here, you see a little retracement here, right? This wick, and you place your trade on this candle and ride it all the way down to try to capture these pips right here. These pips right here. Okay, we got into the on this candle. We're trying to capture these pips right here. And it's usually like a 1-to-3 or 1-to-2 okay, ratio. You're just trying to capture these pips. But so back test this. Let's do another one. Let's do another one. Okay, we already no, we didn't do this one yet. Because we have a high here, right? So this is the high over here. We'll move this high to this high right there. That's one day. And remember, this is 24 hours in a day. And then we have a high here, right? And again, we're going to put our neckline underneath, right here. All right, and I'm going to take this away. This is our neckline. And we have that little low here. This is our neckline. And then what happened? Within this neckline, the market on the next day broke the neckline and tried to come back and touch it with this wick black candle here that wicked up a little bit. And this is where you try to capture a couple of pips. Even if you stayed into this trade right here, but then the very next day, and you had gone into the trade, let's say, on this candle around this area here, and you placed your stop loss above this area here, let's say that was your stop loss. Do this here. The stop loss was above this area. You would have never gotten stopped out, and you would have captured all these pips going lower. Okay. By you monitoring your trades, or setting and forgetting it, or setting your targets, because you can always look to left to see, okay, where do I think the market's going to go down to so I can set my targets? Okay. And those are usually called the areas of interest, right? What is more than one touch of an area, and that's where you set your targets. All right, so I mean, again, the best way to practice this is to do some back testing. Let's see if we see some lows. Okay. All right, so right here, we see a low in the market here. A low in the market. These are daily lows now. Remember, there's a low here and there's a low here. These are two different days. Okay. And then we put our neckline right above the low, which is right here. And what happens? The market came back, touched the neckline, but went through the neckline. And then we capture all these pips right here. We capture all these pips right here. Again, if you put your stop loss below the area, which is right here, it would have never hit your stop loss if you had entered right here and rolled all this because you know the market's trending higher, right? And then you're in profit this whole time, okay? Now this is just back testing and just showing you what to look for. What to look for, okay? And again, there's another one right here. We're gonna look for the day's high, which is right here. And this day's high, which is right here. And again, the neckline is right over here, right? And what happened? It came down. So high and a high, and then reverses the opposite direction. Okay, again, a low and a low, it reverses the opposite direction. Hopefully you guys are understanding what I'm sharing with you. This is really powerful. When I found this out, I was like, wow, this is awesome. Because I can look at the previous day's low, and I can find another day's low, right? If 2 days lows matches up, and I can anticipate the market to go higher. If 2 days highs, like right here, got a high here, then you got a high here. These 2 days high, I can anticipate placing my neckline like right on here, in this candle. I can anticipate the market to go lower, like it did right here. Bam, bam, bam. That's pretty powerful stuff. Could have captured all these pips. So when you're looking at your dailies, just focus on the past 2 days. Okay, just focus on the past 2 days. And again, this is day, today, and then yesterday's high. These two highs were right here. And I already showed you this earlier, but I'll do it again. There's a day high and a day high. Okay, and what are we looking for? We're looking for a break of the neckline. And look what it's doing. It's going lower. Boom, 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 boom. Here. Okay. Now, remember, in the 4 hour, okay, we're in an uptrend, right? So we plot out our uptrend, our trend line. We're just anticipating the market, you know, like this. We're looking for the market to trend higher. So if you wanted to take a counter trend there, you could, but wait for it to come back to the trend line and then bounce off the trend higher. That's what I would do. Okay. Because you would probably get more pips when it trends higher versus trying to capture, a quick scalp trade. I mean, you could do that if that's what you want to do. You can scalp it all the way down to this line and then make some profit, or wait for it to get to this line by setting a marker. And you probably want to look for like an order block, which is right here. And again, an order block is an area where the two candles didn't meet, right? So I just plotted out an order block for you. If I take it away, you'll notice it. This candle and this candle, the wick didn't fill this order block. So that's what we call an order block, okay? Or fair value gap, either or, okay? Once it comes back and fill this area, because it has to come back and fill this area, that's where you place your trade. If you see a bullish engulfing candle appear in this area, you'll go ahead and get into the market and continue to ride the trend going higher. Okay, but keep in mind that the market doesn't owe us anything. It can come way past this area, right? You come way past this area. You do one of these numbers, pass the area, come back and touch this area and go lower. So it might just do a reversal. So we have to anticipate and read the chart based on the candles that it gives us. If you haven't already listened to or read the Candlestick Bible book, you can go to my channel and find it on my channel. It's one of my most popular videos that I have on here. It's an audiobook version of the book itself. You can also input your email address and I'll send you a copy of it free of charge. So you can go and watch that or read it and just read the candles, because you're looking for specific candles when it comes to these areas in order to continue to ride the trend going higher. We're looking for a reversal, the trend will go lower. And so it's important to pay attention to that based on the candles, right? So I wanted to share this tidbit with you guys. Hopefully you found value in it. Hopefully you back tested and, try to, make sure you see it with your own eyes of what I just shared with you. And hopefully it'll help you to take better trades. So with that being said, I want to thank you all for watching another one of my boot camp trainings on this particular Saturday. Come back next Saturday, and there'll be another trading waiting for you as well. Don't forget to subscribe. Don't forget to hit the bell button for future trainings. Okay, you'll get notifications of future trainings. And when I upload a video, it'll send you a notification. Don't forget to like, give me a thumbs up, and share it with your friends. Because this is just one of many different techniques, strategies that you can add to your trading plan. And as you profit from this, please let me know in the comments and say, hey, I tried it, it worked, and just thank me along the way. But other than that, you have a great day. Thanks for watching, everybody, and much success to your trading trading journey next week. Take care. Bye bye.